Welcome to the Multifamily Investor Nation podcast. I'm your host, Whitney Elkins Hutton, the Director of Investor Education here at PassiveInvesting.com. And with us today, we have Brian Briscoe. Brian, welcome to the podcast.
Hey, thanks, Whitney. I appreciate it.
Well, Brian, before we dive into the details of the Highland Grove portfolio, 61 units in Akron, Ohio, tell us a little bit about yourself, your background, how you got into multifamily, and where you're at today.
Awesome. So born and raised in Salt Lake City, 2 degrees in math from the University of Utah. I started early. I promise I'll go, quickly over everything else though. But while I was in grad school, I got into the Marine Corps Reserves, and that was something that I didn't realize would be such a big decision in my life. But, a few years later, we had September 11th terrorist attacks, World Trade Center, Pentagon, thing. And I decided to go active duty, and I ended up spending 20 years on active duty, retired in 2021. So that kind of gives you the time frame that I spent. But along the way, when I was active duty, I started buying single family homes, and it was my model was, repeatable, but I could only do it every couple of years. I knew I had to move every 2 to 3 years, and we'd move somewhere, we'd try to buy a house, live in it, turn it into a rental, and over the 20-year career, I was only able to do that 3 times, but I kind of got the taste for multifamily, the taste for not for multifamily, but for real estate. And when I started getting towards the end of, the career, when I started seeing that big light at the end of the tunnel, and the off ramp, it was clear to me that I wanted to do something real estate. And so I started researching, how I could scale my single family portfolio. And long story short, ended up landing in multifamily. So got into a coaching program in 2018. I was still active duty. I was working at the Pentagon at the time. But, from there, I was able to, find a couple of partners, close on a lot of properties. My first goal was to replace my annual income, which, I was able to do before I retired in 2021. And since then, I've, more or less been working at real estate full time. Have a podcast that, for the listeners, you can hear Whitney's story on my podcast soon. It's Diary of an Apartment Investor. It'll actually be her second appearance, so I'm excited for that. And now I just hired somebody to do acquisitions for me in Salt Lake City, which I'm excited for. It's my first hire ever. And earlier this week, I made my first W-2 payment, to somebody ever. So that's one thing we're looking at doing. I also launched a real estate mentoring program here soon, or here recently. Sorry, past tense, present, whatever. I was not an English major. And occasionally we'll come in as KPs on some deals, key principal, loan guarantor, whatever you want to call it. But occasionally we come in as KPs on deals like the one we're going to talk about today too.
Awesome. Well, thank you for sharing all that. Well, let's dive into the details of this, because this is a little unique, right? Because you came in as the key KP on the Highland Grand portfolio, 61 units, Akron, Ohio. But you weren't involved from the very beginning. You came in about towards the end of due diligence, right? And you guys closed in October.
Yep.
But let's go ahead, if we can, try to get as much color before closing as possible. So how was this deal? How did your partner find this deal?
So partner found this deal through a broker, and it was just typical brokerage relationship. And she was able to negotiate a good purchase price. And this deal, it's not kind of like the ordinary deal. I mean, usually when we talk multifamily deals, it's, everything's on, one parcel or, a couple of buildings. This is 61 units on 13 different parcels. And out of the 13 parcels, 4 of them are single family homes, so, we had, most of them were on the same block. And we say Highland Grand because, one street's Highland, the next street over is Grand, and there, all the properties are in between those 2 streets on the same block, except for 4 single family homes that are just kind of smattered. So Part of this one is, a lot of, multifamily operators, would look at this and say, I don't want the portfolio. But it ended up having, and we'll talk about it later, it ended up having a lot of, really good aspects to it that we could leverage, so she negotiated the price and got it under contract in May.
Okay, got it under contract in May. What price?
3.5 million.
Okay.
All right. And so she got under contract in May. She went out to a local bank, and the local bank, she had a key principal lined up, and went to a local bank, and the local bank, yep, we're going to work with you. Everything's good. They gave her a quote on the loan, and it was like a 5% interest rate at the time. I think her original quote was high fours. So obviously, things changed a lot between that, when she got that first quote and when we closed. But for some reason or another, the key principal she had lined up backed out, and he was going to bring a significant amount of capital. So she contacted actually somebody that I partner with frequently, a guy named Kyle. And, Kyle brought me into the deal as well. And so the relationship Kyle and I have together, we've partnered on a couple of deals before. He's passively invested in a couple of our deals. He's been a loan signer on one of our larger deals when we needed a little extra, net worth help. But, he's got a fair amount of net worth. I'm not a slouch when it comes to that, but I've got a lot more experience, and that's kind of what we bring to the table is, between the two of us, we can reach pretty high on loans. But so yeah, we came in, we looked at the property, and of course we had to get comfortable with Paula as well, who has got the deal under contract. But yeah, a lot of good things there. So end of due diligence, she shared with us all of the due diligence materials. There weren't any, huge red flags with due diligence. But the things that the biggest challenges we had were all related to money, and the first part of it was obviously rates started going up, and as rates started going up, our numbers started changing. And with the economic forecast and the economic news that was coming out at the time, it was also not the greatest time to raise capital, because a lot of people backed out. Paula had a bunch of soft commits, and one by one, the soft commits would, hey, I'm not sure if I'm going to have a job 6 months from now. I'm not sure, and so just because of the economic concerns, a lot of people started backing out. But, we looked at the deal. We liked the deal. The deal worked extremely well for a lot of reasons. And, our conversation with Paula is, yeah, let's try to make this happen. Let's see if we can still put pieces together. Let's see if we can get a loan that works. Let's see if we can bring some money to the table, or some people who can bring money to the table, and lock this up. So that's kind of like where I came into it. Due diligence, like I said, was done. No big glaring issues, and still a lot of potential.
Well, so even about this, because I think it's something that's curious for me, because there's a unique part of the story. There's two parts here that are really unique. The fees, just how the money really does get put together on some of these deals, especially because most people, if they got told no from the bank,
yeah,
they're done, right? Paula, your partner, resourcefulness, right? Like, so she's thought out to keep the deal together and brought on the experience and the balance sheet in order to do that. The other unique part of the deal is I do want to dive into a little bit around like the properties and like how exactly did you find funding for that? But let's tackle one thing first here. She finds the property in May. You guys don't close until October. That's a really long runway. So how did she structure the contract as such to be able to, because most contracts are 30-day due diligence, 30-day to close, and then maybe you get a couple extensions in there, but you have to put down additional hard money.
Yeah.
This is 5 months we're talking about, 6 months almost. So how did this work?
We were actually very fortunate that the seller was flexible. All right, because we had to ask for a lot of extensions. and the seller was flexible. And I was actually surprised at how flexible the seller was. And the seller, I think, I mean, Paula was committed to it. And I think the seller was just like, yeah, I mean, yeah, I understand what's going on. I can see what's happening in the market. I'll give you time, and so we did have to go back to the seller a couple of times, and I mean, first she lost the key principal. We ended up having to shop around banks again because the original bank that gave her the term sheet, they backed out because she brought in two key principals that were not from Akron. And the first bank, they wanted local people, and so the first KP she had was a local person. And when he backed out, we didn't find this out till a little bit later, but that bank backed out too. And so we had to actually start shopping around banks again too. But yeah, we were extremely fortunate that the seller was flexible. And I think part of that was just Paula's communication with the broker was just, hey, this is what we're doing. I got new key principals. We're shopping around banks again. And like I said, we were just very fortunate that he was amenable to that.
Was there earnest money down on this property, and how much, and was it hard? And then every time you extend, did you have to put down more earnest money?
The earnest money was, the earnest money was in, and it was hard. And there was, with the extensions, there was more money put into it. And so at one point, Paula asked us if we could put some of the earnest money, like the extension fees in. My partner ended up, working out a deal where he paid for some of the extensions. So yeah, I mean, it was, we had to put more money in each time we asked for the extension. I don't remember the exact numbers though, but at certain points in time, there was more money that went in, and that's very typical. When you get extensions, the sellers are going to be tit for tat. It's going to be like, okay, I'll give you more time. You just got to give me more money, and it's not going to be refundable. And if you back out, I get to keep your money. And so that's basically what happened. I just don't remember the exact dollar amounts.
Okay. So let's talk about the due diligence piece just for a second, because that does give us a lot of kind of color. There's a lot of pieces there that our listeners glean from that story, even though if there was like, oh, it's no big deal, like, totally went smooth. But this is 61 units on 13 tax parcels, correct? So how did you as the partners handle the inspection and access to all of those units? And then two, how did that, like, how do you find, I'm just curious, right? Like, how do you find a lender for that type of property structure and insurance for that? Like, are you getting different insurance policies? Is it all one globally, the overlay in all 61 units?
Yes. I mean, when you do multiple parcels, that becomes a challenge. Okay. And we had to pay a lot of extra money. I think the biggest extra expense was the title work. Okay. Because, now instead of buying, 61 units on one tax parcel, the title work and the attorney fees were a lot higher than we normally budget, and one of them, when I saw the number, my eyes got really big, and I was just like, oh my gosh, like the lender legal fee was like 3 times what we normally pay on lender legals. But as far as access, I mean, the seller gave us access to everything, and so we had all of the documents, and it was actually very well organized. Out of, I've been part of 12 transactions that have closed, 4 more on the docket right now. And the seller was one of the more organized sellers, and so we had the documents in a row. And I mean, Paula was also amazingly organized as well. And so, like, when we came into it, we reviewed what she'd done. She'd gotten access to all the properties. She had already brought inspectors in, and there was some exterior work that she knew needed to be done. And so she already had the inspectors' reports on all that stuff. One of them has some potential foundation issues. Some of them had to do some exterior work. There was also what part of the value add plan is, one of the buildings had a 4th floor that had open space, had the exact same amount of space as the the floors below it, but with no apartments there. You know, it was just, you walk in and it's a wide open space. And so part of that was, part of the deal was we're going to build those out, and we're actually getting bids on that right now. But we're going to build two more units out on that spot right there. But yeah, I mean, the seller gave us access to everything. We went into each, and when I say we, it was Paula before we came into it. My partner and I visited the property. You know, we were able to actually visit the property as well. That came much later in, and we didn't do the full, you know, we didn't have access to every unit. We didn't go into any of the units where people were there, but we went into every single vacant unit and walked around every property by the time we got out to the property. But as far as insurance goes, we found one carrier that would put everything on the same policy, you know, and we were able to get a little bit of a break in price because of it. Part of the issues when we did the extension. Now, Akron, Ohio, you know, a lot of the stuff in this area was built in the 30s and 40s, you know, and it's Akron's like the rubber town, you know, it's where a lot of the was it Goodrich? One of the big tire companies was based there, and I wish I knew, but you know, it's a lot of the stuff was in the 30s and 40s. That big boom was when a lot of stuff was built. So there was a couple of buildings that had exposed knob and tube wiring, you know, and so you know, we were able to negotiate with the insurance company saying, hey, we are going to fix it, you know, and they actually priced us, you know, as if we'd already fixed it with a, you know, give us proof that you fixed it in a couple of, you know, anyway, that was like one of the first things that we fixed. But yeah, with the insurance, that ended up being difficult. Like I said, with the title company, that ended up being a lot more expensive because they had to do title searches on 13 different parcels now instead of one. And with the lender, I mean, we just had to shop around, and we had a really good local broker, you know, mortgage broker that did a lot of that legwork for us, you know, so that's where we were leaning on him. And, you know, I mean, he got a good chunk of money when we closed, and he earned every penny of it. Sometimes I wonder if the brokers earn the money, but in this case, he earned every penny of it. And so yeah, he went to all the local lenders that he knew of, told them, okay, this is the property, this is the team, this is what we have set up, and he came back to us with an option that worked, and so we were able to move forward.
Okay, well, let's talk about the loan on the property. So you said 3.5, 3.6 million is what it went under contract for. Was there any retrading, or is that what the final price ended up being?
That was what the final price was. Yeah,
okay.
no
mentioned there were some foundation issues and stuff on the property, so I didn't know.
Yeah. I mean, I think our total foundation bill, I think we just had that scope done. It's a small number, but you know, it wasn't enough to rock the boat. Yeah, I think we paid like 20,000 to get that fixed, but yeah, did not rock the boat on that one.
Okay, so how did they structure the loan? First of all, was it all on one loan, one blanket loan across all the property? Okay.
Yep.
And then what was the interest rate in the loan? Did they do loan to value, loan to cost?
We got 75% at close, and we also have 300, just over 300,000 that we can draw for renovations later. So, I mean, the nice part is we did get, you know, a very fair amount of proceeds, especially for the lending environment, and we got a lot of the renovation costs wrapped in, you know. So, a lot of the things that we had on a renovation budget, you know, we have money to pay for it up front, so we pay for it up front. Get the lender to come out and do the inspections. They do the inspections. They write the check to reimburse us. So that's how that one worked. We ended up getting a variable rate, which, you know, it is what it is. We have prime plus 25 basis points. So when we closed, we were at 7.25. You know, right now, I think we're at 8.5. I'd have to, I mean, it resets every month. So once a month, they'll look and see what prime is, and that's what we pay in interest for that particular month. But the nice thing is the cash flow structure still supported it. And one thing that we changed to make this deal actually work a little better is we were going to try to syndicate it up front. And instead of syndicating, we decided to do a joint venture, bring in a couple of people with higher dollar amounts. And so without the syndication, the GPLP structure, I mean, we weren't skimming off the top. All the returns were coming straight back to us. So anyway, it ended up being more advantageous to do it that way. We all agreed on the structure. We all agreed on the numbers. We all said, okay, we're just going to fund a little bit more money in there. And so we got a very hefty reserve account to account for, any fluctuations in rent. And I mean, so far, so good.
Awesome. So let's talk about that, the partnership and how you structured it. So, as much detail as you can share as possible is appreciated, because a lot of people here really learn all the different ways that you can take down real estate, right?
Yeah.
It's amazing. People are like, how do you buy a building? I'm like, it depends. Literally, it depends.
You do it one brick at a time if you want, but that's, so the structure was interesting. So, and this is where we're having a really, really good network helps. Earlier in the year, I had a guy who'd invested with us before, call me up and say, and I'm not kidding, I've got $2 million that I need to invest, and I need to get as close to 1-for-1 depreciation as I can get. All right. So he had a tax problem and a lot of money. All right. And so when we started looking at this deal, we saw opportunity. Okay. And the opportunity was, hey, Paula, you know what? I mean, you're having a hard time finding money through the syndication route. I might be able to help you. So this individual, basically got one-on-one with Paula, and they horse traded. I mean, it was basically, I want more depreciation. If you can work it out to where I do 1-for-1 depreciation, I'll fund half of your equity requirements. And so he came in with one big chunk. But we just, like I said, there was a little bit of horse trading of depreciation versus cash flow. One person wanted a little more cash flow up front. The other person really cared more about the depreciation. So they just did a quick swap on exactly that. You're going to get my cash flow for the first 2 years, and I'm going to get your depreciation for year 1. And that's how they settled things. But then, that got us half of the way. Paula had some money to put into it. When we decided to go to the JV structure, as a key principle, I would have had a certain percentage of the GP, and but when we started to do the JV structure, and I knew where we were at. I'm like, okay, I can put money into. I matched Paula's funds, and then I happened to know one other person that that had a property for sale and was doing a 1031. And it just so happened that the timing for that lined up perfectly, so he closed on his property in late September, and maybe mid-September. I don't remember when it was, but he closed on his property. And within that 45-day notification period, we had already, funded everything. So it was just a really quick for him. And the process being drawn out actually helped with that one, because he had plenty of time, with his property for sale under contract. He had plenty of time to review it, get comfortable with it, and everything else. And so, so we ended up with just a very small number of people, one big investor. And then, like I said, Paul and I, put in some money, and then 1031. So the structure got complicated. Okay. Because when you do a TIC, there's some certain rules on how you're supposed to take title. Okay. So the TIC, the entity that was used on the previous property had to be on title of the new property, but we had 13 properties. Okay. And so when we're talking with our attorneys, and we're talking with everybody involved, talking with the 1031, the coordinator, whatever their role is, that entity could only be on one property, and the numbers still had to work. They had to go up in value, up in debt, and everything else. And so, I mean, we had to do some pretty nifty legal maneuvers that basically the tick part, the person who came in with the tick money is on title for only one of the properties. All right. So that's a little bit different, but we created an LLC as well where, he has ownership in everything. So it was a lot of time spent with the attorney saying, okay, here's what we need to make this deal work. And, I think the attorney also earned his fee on this one as well, because there was a lot of back and forth between the lender, between the title, between the 1031 rep to make sure that everything that was working. And then we had also kind of agreed with the guy bringing the 1031 money in that, he would have, ownership in everything, so what we couldn't work out on the titles, we worked out inside our operating agreement, and so anyway, that was all. Fortunately, we had, a bunch of people who were really agreeable, and there's nobody dug their heels in. And so yeah, that's how we worked it out. And like I said, it was really nice to have an attorney that had a lot of experience on that deal as well.
Awesome. Well, it sounds like your broker earned their fee, and
Yep.
the attorney and the title company earned their fees as well on this particular.
Yeah.
So, in wrapping up, what did you think? Especially, and you can try to speak to the whole deal or just where you entered the deal forward. What did you think was going to be easy that actually ended up being more complicated, and did you think was going to be more complicated that actually ended up being easier?
The part that I thought would be easy, this was the first time I'd ever worked with a TIC. All right. And I knew a lot of the TIC rules. I didn't know the one title rule. He could only be on title of one property. I figured we could do it with a portfolio, and that part ended up actually being quite complicated, so that part was difficult. The thing that I thought would be hard that ended up being easy. Oh, geez. I mean, there was nothing really, and granted, we still have a lot of things to go. One thing that I was thinking would be hard, that seemingly is easy, is getting the permits to build out the new units. And we did a little bit of digging, and we contacted the city and the county and what we need to do to get the permits. And what we ended up finding out from a lot of people who operate in Akron is it's actually a lot better if you do it and ask for forgiveness. And this came from everybody that we talked with. We looked at the zoning. We didn't have to change the zoning. We didn't have to, but they all talked about, they all said the exact same thing. And when we talked to the people at the county, they actually agreed. They're like, yeah, that's what most people do. And it's just kind of like, instead of going through the whole process to get everything approved, that was just kind of how most people operate there, and so ended up being a very, very loose. And at first I was a little uncomfortable with that. I'm like, is that really how it works? And that was a story we got, and we started asking more and more people. And like I said, that was something that didn't sit well with me at first. I'm just like, are you sure? I mean, I don't like the idea of going with somebody else's opinion. But we started asking more and more people, and when the planner's office actually kind of confirmed, yeah, most people do that, and it's rarely a problem, and it's just like, so that's that's the future stuff. Right now we're getting that part bid out, so we haven't got to the point to where we would normally submit all of the plans and everything else yet. But that's one thing that I'm hoping ends up being as easy as everybody says it is.
And for those of you who are watching the video here, you're seeing me laugh in the background because I've been in your shoes, Brian, on this very things. You're just like, are you sure you don't need me to pull a permit right now?
Yeah, and Paula lives in Akron, and so she's able to go sit down with people face to face, which is extremely helpful. I mean, I live in Idaho, I've been to the property once, and there's a lot of it's got a lot of really good things about the property, a lot of character. It's in a very nice area of town. It's right next to Highland Square, which is where that they have like the festivals there, and there's coffee shops, restaurants, these microbreweries and everything else. And anyway, a lot of there, like I said, there was so much potential with this one that we were willing to work through all the trouble to get there because of the potential there.
Awesome. Well, Brian, thank you so much for your time today and sharing your knowledge and expertise with us. If
Yeah.
people wanted to follow you and find out more about you, how could they do so?
Easiest place is LinkedIn. I'm very active on LinkedIn. So I also have a podcast of my own, like I mentioned, where you're going to get to hear Whitney's side of the story. That's Diary of an Apartment Investor. My company is Streamline Capital Group. That's a company that buys and sells the real estate. And I also have a multifamily educational community called the Tribe of Titans, where we teach people how to do what we're doing.
Awesome. Well, again, Brian, thank you so much for sharing your journey here with us today. And we look forward to hearing more about your deals in the future.
All right. Thanks, Whitney.